Is the ICICI Pro Lakshya Wealth Plan your pathway to fulfilling your financial dreams while ensuring comprehensive financial protection for your family? Let us find out through an in-depth analysis in this video. Hi guys, welcome back to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. So now before analyzing this policy, let us first understand what is this about. So this is a non-linked participating life insurance plan, and some of the key features of this policy are: you get life cover throughout the policy term to secure your family's financial future, and you get guaranteed capital protection in the form of sum assured on maturity, and you can also enjoy bonuses in the form of regular additions every year to grow your wealth and terminal bonus at maturity. You also receive a lump sum amount on maturity to fulfill your dreams. There are tax benefits on premium paid and benefits received as per the prevailing tax laws. So these are some of the features of this policy. Now let's move on to understanding the benefits available under this policy. So there are two kinds of benefit: death benefit and maturity benefit. So death benefit is given to the nominee or the legal heir in case of unfortunate death of the life insured during the policy term. So as you can see from the screen, there are two options mentioned, right? One is sum assured on death plus accrued regular additions net encashment if the policyholder had any, or plus the interim regular addition if the policyholder had any, plus the terminal bonus also if they had any. So all the sum of this options will be the death benefit if it in case was the will be the death benefit for the legal heir if it was higher out of the other option, which is the 105% of total premium paid as on date of death, which will be payable to the nominee or the legal heir. So out of these two options, whichever is highest in value, that will be given as the death benefit. So the maturity benefit here comprises of the sum assured on maturity plus applicable guaranteed value benefits plus accrued regular addition net of encashment if they had any, plus terminal bonus if declared. So this will be given to the policyholder once the policy matures. So these are some of the benefits available under this policy. Now let's move on to understanding the advantages as well as the disadvantages. So the advantage here is the maturity benefit can be received as a lump sum or through regular income payments, and you can avail a loan of up to 80% of the surrender value. The death benefit here can be opted for installments over a selected period. So these are the advantages. Disadvantages would be the potential returns are relatively low compared to other investment options. The sum assured here mentioned is also insufficient to adequately cover a family's basic financial needs. So these are all some of the advantages and disadvantages of this policy. So now as we have a basic understanding of this policy, let's move on to understanding the potential returns that we can get from this policy to better analyze whether investing in it will be worth it or not. So what we are going to do is we are going to calculate the IRR of this policy based on the figures mentioned in the policy brochure. So IRR is nothing but internal rate of return. So let's assume for example purpose that a 30-year-old male opts for the ICICI Pro Lakshya Wealth Plan with a sum assured of 10 lakh rupees, a policy term of 20 years and a premium payment term of 10 years. So the annual premium he has to pay is 1 lakh rupees and the maturity benefit is provided at the end of the policy term. So the example here assumes two possible future investment returns, which is 4% per annum and 8% per annum, indicating worst case and best case scenario respectively. See, both these returns are non-guaranteed and only serve for just to indicate for example purpose. These are not guaranteed, or these are not the maximum or minimum amount of returns you can get from this policy as well. This is just for representing the worst and best case scenario to the viewers. So at 4% per annum, the maturity value of this policy is 15.43 lakhs, yielding an IRR of 2.82%. as per the ICICI Pro Lakshya Wealth Plan's maturity calculator, which is lower than the interest rate of a savings account. So if you kept your money in your bank and did not invest anywhere and took the risk of investing, still you would have made better returns compared to this. So this is for the worst case scenario. For best case scenario, at 8% per annum, the maturity value is 25.17 lakhs with an IRR of 6.04% as per the ICICI Pro Lakshya Wealth Plan's maturity calculator, which is less than the interest rate of fixed deposit, which are guaranteed. Here we are taking risk in investing in something which has risk, right? So but it's not even giving us a better risk adjusted return. Moreover, it's not even able to match with a debt instrument kind of return. It's even lower than that and it's not guaranteed. So what kind of value addition is it adding to your investment portfolio? The sum assured of this policy is relatively low and the returns are unappealing for most investors. So the IRR analysis in this video highlights that this policy may not be a profitable investment option for investors. So now let's move on to another part of the video where we are going to conduct a comparative analysis. So as we know that this policy is not giving us a desirable outcome we need, so what we are going to do instead is we are going to compare the policy's performance with an alternative strategy that separates life insurance and investment to see whether we can fetch better returns from this strategy. So let us assume the same annual premium of 1 lakh rupees is used more efficiently for both life cover and investment. So for example, we have opted for a pure term life insurance policy for life cover with a sum assured of 10 lakhs, a policy term of 20 years and a premium paying term of 10 years, similar to the ICICI Pro Lakshya Wealth Plan. Probably the only thing which differs here is the premium, which cost us 6,600 rupees only here, while we were paying 1 lakh rupees in the ICICI Pro Lakshya Wealth Plan. So this leaves us with 93,400 rupees available for investment. So there are two kinds of investment option you can choose. Here we have represented both the low risk instrument and high risk equity based instrument to give you more options based on your risk appetite. So if you are a conservative investor, you can choose public provident fund, which is a government backed fund giving you guaranteed returns, and it also gives you tax benefits under section 80C. So this low risk instrument requires a minimum annual investment of 500 rupees, which we adjust after the 10-year premium paying term. So the final maturity value you can get from this is 27.56 lakhs with an IRR of 6.64%, which is slightly higher than the best case scenario 8% return in the ICICI Pro Lakshya Wealth Plan, and it's also guaranteed, which is a good plus, right? So if you're a high risk investor, like you're an aggressive investor and you're willing to take a lot of high risk, then ELSS equity linked savings scheme will also be highly benefitable for you. So this is a fund which is a tax saving tool essentially, and it also has a good track record of performing even outperforming its average 12% return in certain cases if you choose to invest in it consistently for more than 7 to 10 years. So this is a high risk equity based instrument. So the pre-tax maturity value in this ELSS is 57.01 lakhs, and after capital gains tax, the post-tax maturity value of this is 51.21 lakhs, which offers a post-tax IRR of 10.81%. So the PPF and ELSS options deliver superior returns compared to the ICICI Pro Lakshya Wealth Plan. So bundling insurance and investment often results in lower returns, while separating it and investing in separately will give you higher returns. So for inflation beating growth, separating investment from life insurance is a smarter strategy. This ensures a robust financial plan tailored for both life protection and wealth creation. So what is the final verdict on ICICI Pro Lakshya Wealth Plan? Is it worth investing or not? As you can see from our analysis that combining insurance and investment often results in suboptimal returns as seen with this plan, right? So the return analysis here in this video reveals us that the plan fails to keep pace with inflation, making it inadequate for building the corpus needed to achieve our future financial goals, and also it has a high agent commission. Moreover, the sum assured is too low to cover a family's basic financial needs. A pure term life insurance instead will be a better alternative alternative compared to this, offering you higher coverage even after affordable premium helps meet the protection requirements for your family. Investing separately and building a diversified investment portfolio will help you attain inflation beating returns in the long term. So from our analysis we can see that the alternative strategy where separately investing in insurance and investment will definitely help you achieve good outcome.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.